Mark Selby's back, folks. Here he is. Hello, how
Matthew
are you?
Gordon, good to see you.
Where have you been?
Good to see you. It's been pretty hectic post PEA, talking to lots of different people. So it's good. Feedback's been excellent. So, again, there's, the people who think you need a 20% IRR for a good project. But as I said before, most of the real investors and more strategics we were talking to are all very happy with the results. So, it's been a good couple of weeks. So it's
Fantastic.
good to be talking about nickel again too, because it's been a good couple of weeks for the nickel market.
It has been a good couple of weeks, but just on the PEA, and we talked about a few points last week. In fact, well worth listening to in terms of how you interpret other large-scale projects like this. So definitely worth doing. But in terms of the institutional guys, not just the IRR, but in terms of the market that you're selling into, they totally get that because we were talking stainless steel as opposed to EV revolution.
Yeah. Oh no. I mean, there's two key dimensions to it. One is, it's a extremely well understood, lower technical risk product that you get higher margins for. With institutional investors, that was kind of like check. And then the other fact is the nickel market, and we talked about this before. Is in terms of the oligopoly that currently controls thing. Again, it's going to break down in a few years, but as of right now, that's still in place in terms of processing concentrate. So, the fact that I have a route to market that doesn't involve any, Glencore Valley or any of the existing smelters, or is dependent on EV company coming to the table, gives me the significant leverage with both those groups who will have some involvement in the project at this point in time. But, I made it very clear that the project economics are extremely well supported by a path to market that doesn't include either of them. So having that negotiating leverage and having a higher value, lower risk path to market, works with a lot of investors.
Well, that's good. Well, that's good. It's always interesting, actually. I think it's a bit easier during boom times. We're in boom time, I think, for nickel, we could say. Yeah. Would you agree, first of all? Do you agree?
Oh, yeah. No. We are, again, the signs of, we've talked the emergence of numerous closeology plays starting to come to market is a sign that the boom is here. So
we should talk about that later. We've had quite a few on the program coming in. We're so close. You can see their property from ours if you are in an aeroplane.
It's there. We just need to drill it.
Yeah, it's definitely there.
It's guaranteed.
FOMO, everyone. FOMO. Let's talk about that later, because I think there's something in that. That's a real sign. Those are little signs that the market's kind of getting places. If when people pull a project out of the drawer and go, it didn't work last time or the time before that, but it'll definitely work this time. We've got new technology, folks. Why don't you give us a kind of the usual rundown? What is happening price-wise in the market for nickel and maybe copper? Sure.
Yeah, no, it's the nickel actually broke away from the pack a few days ago and popped out of it's been kind of in a 20 cent, $500 ton range, between $8 and $8.20, popped up for a day or two. It's come back down this morning, along with a lot of the rest of the base metals have also sold off, but it's holding up very, very well at the $18,000 ton level. And I think we'll get into a bunch of the, in terms of supporting. Key thing I've been saying all along here, if you go back a year and a half, is one of the key indicators in terms of the overall health of whether nickel prices are sustainable is looking at stainless steel prices. And right now, in a number of markets, stainless prices are as high as they've been since 2011. Some of them in China, they've only been trading for 3 or 4 years on a publicly traded market, but stainless futures are, at close to record highs. So, the fact that you've got that kind of underpinning, we'll talk in some more market detail about other parts of the market, but really, really, robust levels from here. So, which is good. And again, copper has had its big run up to $10,000 a ton. Everybody was, getting on board that's, going to be this high forever. And since then it's pulled back, trading sideways. I apologize. I promised to, look up some of my favorite numbers. I haven't had a chance yet, but one of my numbers is treatment charges in terms of concentrate processing. And those numbers are now starting to creep back up in terms of the cost to process the smelter. And the meaning of that is when the Chinese think a metal's cheap, they buy it in whatever form is possible. So whether it's metal, whether it's scrap, whether it's concentrate, as long as they can buy it at a discount, or they think it's a cheap price, they back up the bus and buy it. So what happens is analysts get all bent out of shape and think, oh, there's massive smelter imbalances because treatment charges are collapsing. That's a little part of it, but more often than not on these market turns, it's just the Chinese saying copper's cheap. I'm going to buy it in concentrate, and that treatment charge gets compressed. So the fact that treatment charge is now uncompressing says maybe China's not as hungry for as much copper as they actually wanted. So we'll start to see that unravel. And I will promise in the next week or so I will look up some of my other favorite copper indicators to see if that market really has topped out from here. So
the Chinese are contrarians. They like a deal. They're buying.
Oh, they do.
Dip.
No, I was talking with one of my favorite commodity analysts the other day. We were talking about the fascinating world of molybdenum. He and I are two people who have actually spent some time on that metal, and the price of molybdenum has popped up by more than 100%. Over the past year and a bit, from $8 or so a pound up to $20. And the Chinese, you go back every market turn at $8 or $9. Chinese, it's generally a net exporter of molybdenum, and then all of a sudden, when prices drop, you see this massive surge in imports. And again, that those imports cool off as soon as it gets to a price, that's too high. So the molybdenum traders, people who bought that, basically have made about $300 million in 12 months. So
wow,
it's pretty nice return. And again, they've done it. I've seen it 3 times. So it's not it's one of those patterns that happens every time. So again, history is not doesn't always repeat itself, but it's a pretty good indicator of what might happen. So ignore the signals that history provides at your peril. So
well, let's talk about the market in the broader.
Yeah.
Stick with this for a bit, okay? So there's a real demand story out there. So and maybe we should talk about that first, because I want to talk to you about the supply side in a second, because we've had a few people on and we're talking about where's the copper coming from, where's the nickel coming from, and is there a big recycling story needed to kind of underpin all of this, because we're marching headlong into an electric vehicle revolution, battery revolution, and at some point people are going to go, we haven't got any more, right?
Yeah. Yeah.
It's a problem, right? So let's talk about the demand story. So what's happening out there at the moment?
Yeah, no, again, that's why, in terms of the prices, why they've been so well supported despite Chinese and Tsingshan trying to talk the market down. Global stainless production, not just China, but global, is up 28% year to date May. That's a pretty substantial number. If you just basically said we're going to get no more growth in stainless steel, then you're still going to end up at an 18% growth year over year. And remember, at the beginning of the year, I said, demand was going to be between 10 and 15%, closer to 15. I don't know. We'll see. Maybe you have to tick it up to 20%. The other thing that I find reassuring is that, in copper, you saw analysts falling all over each other to say, oh, it's, this is the start of a whole thing and prices are going to be really high, $5 a pound copper, here we come. On the nickel side, we're seeing now from a lot of analysts is, we think the market's already peaked. Demand's going to drop off. And again, these are the same people who had demand forecasts for the first half of the year that look nothing like, what we're seeing today. Most of them had demand growth numbers of about half that, with the market in surplus through the first half of the year, but the market's actually been in deficit, for that part of the thing. So again, always, when you look at commentary, if there's a strong consensus on one view, again, what I've seen over time is 95% of the time, the strong consensus is always wrong, always. And what you have to figure out is it wrong and there's more upside, or is it wrong and the market's going to actually come in underneath that? So, again, in this case, there's just so many fundamental vectors around the stainless steel market that, again, yes, Q2 is typically a seasonal top, but in terms of underlying economic growth, the recovery in the West is just getting going, and stimulus in China is starting to get dialed back a little bit, but the kind of pull through, the inventories are in good shape. They haven't topped up at all. So again, I think we're going to see some upside surprises through the balance of the year, and who knows, maybe nickel demand ends up closer to 20% growth year over year by the time we're done.
Isn't it kind of scary that analysts don't usually get it right? And if you gave, say, really intelligent people in their own minds, trying to forecast, usually don't get these things right. Whereas if you gave this to a whole bunch of dumb people, the average would do better. Be great. The jelly bean jar analogy. It's
right.
That's a terrifying thought, isn't it?
986 jelly beans. That's all there. And again, we've talked about this before. I mean, the incentives are, you never want to be really, really wrong as an analyst. So as long as your number's kind of close to the mean, then you're never going to be too far off, right?
They read that book too.
It's a reinforcing process, which is not helpful. So whenever you get these kind of extreme, periods of demand, either higher or lower, they just never ever get there, because it just forces them to go too far away from those historic trends to get comfortable with it. So. And again, the other part I've tried to bang on the table time and time again is, nickel demand growth is always underestimated. It's 4 to 5% a year over the long run. And you've got a bunch of people, who are bullish on EVs, but, the demand growth through 2030 is only maybe 2.5 to 3% a year, which makes absolutely, no sense. For some of those people, we'll be probably at their 2025 or 2026 demand forecast by the end of this year. And I'm not joking at all.
I think there's a book called How to Keep Your Job for Dummies. You should,
right. Yeah.
Obviously taking note of chapter 4. Let's talk about NPI prices. What's going on? Because we haven't really talked about Indonesia, China.
So again, on the way up there, as prices were, moving higher, I always talked about this sort of magic triangle. And again, 2021, I thought we were going to chew through a huge whack of Indonesian NPI, a huge whack of Indonesian stainless, and that was really going to start to squeeze prices on both those things in China, and you were going to start to see Chinese NPI supply have to contract. But again, the reality is demand has just been so strong, that it's soaked up, everything that Indonesia could provide, and continue to not have enough. So we've actually seen NPI prices increasing in China, and we've seen stainless steel prices increasing in China. So again, in terms of signs of, okay, are we at a nickel market top or nickel price top, and I should be nervous because nickel prices are going to drop 20%. Before that happens, you're going to need to see NPI prices actually start to go, not only you need to see them stop going up, you need to see them level out and actually start to see them decline. So the fact that we're kind of 2 steps away from the conditions that would really support a sustained drop in nickel prices says that, nickel prices are going to, are pretty well supported at these levels. And then, ore imports, again, this is the time of year, because Philippines doesn't ship for 4 months, that you should start to see week on week, week in, week out, steady increases in inventory. They actually dropped last week. So, part of it was weather in one part of the Philippines that delayed shipments. But, again, this is when, the markets should be feeling pretty sloppy, because there's lots and lots of new ore supply showing up. But again, ore prices out of the Philippines are also holding up. So, the fact that whole triangle is all pointing to, a strong market suggests, prices are going to hang in pretty well at these levels.
Incredible. It's just I was talking to someone about copper on Thursday last week, and they're like, well, let me tell you, Matt, why copper's going to 15,000. I had one of those conversations.
Yeah.
Didn't, no idea why or how, but the conversation was there's the number. And I think, that felt like a little bit of a, is a bit more of a promotional statement with nothing backing it up. And I don't look. I think at some point I don't doubt that it will probably get there. I'm just intrigued to understand what are the levers that get you there. What are the drivers that get you to that point, like we're going through with nickel. But it kind of comes back to that point I mentioned earlier. It's like people are struggling to see where the next big copper mines coming from, the next big nickel mines coming from. We've talked about all battery metals. I mean, lithium, I think, is plentiful, but there's some, and manganese, I guess. But you've got a lot of people fighting for their share of what they see as the future, battery market, whether it be automotive or home or however we're going to deliver this stuff. It's a good question, though, isn't it? I mean, for you guys, we've talked about, where's the next big mine? The last big discovery, we've talked about, the Voisey Bays of this world. But is it just a case of there's not enough being money spent on the exploration to find these things, or actually genuinely have we had a good look and now we're down to, the last remnants of what we can find? I mean, how do you position?
Oh, you never ever. I mean, again, as we've proved out many times, any commodity, higher prices solves supply issues, in the medium and long term. There's fundamentally, no massive long-term shortage of anything, but again, nickel versus copper. Again, I always find it funny that people, there's no copper projects anywhere. But the reality is there are dozens and dozens of copper projects at various stages of development, from exploration all the way through to feasibility study stage, in lower risk jurisdictions in the U.S., Peru, Chile, elsewhere. And, it's just a matter, it takes a little bit of time to advance them, but there's a pretty well developed project pipeline. In nickel, there is just not, we've had a decade of underinvestment in the space. Projects have not advanced. Dumont, from my past life, is one of the few projects, to make it through to a feasibility study stage. There's literally only a handful of other, decent sized sulfide projects of any scale around. And so you contrast dozens versus a handful. Now, again, we have a huge amount of nickel in Indonesia that's going to come to market, but given the carbon footprint, given the political dependence on one jurisdiction, when a Chinese controlled jurisdiction, and again, all the noise out of this week's G7 meeting isn't going to suggest that, things are going to get warm and fuzzy between Western economies and the Chinese anytime soon. Joe Biden and G aren't going to be hugging it out in terms of, working together to solve each other's problems anytime soon. So, I just think that, underscores, some structural nickel issues. And, we saw the White House commissioned a report on the whole critical minerals and battery metals. And when things are, it's a real issue that people need to pay attention to. When the U.S. government, the U.S. White House says, we need to build a nickel refinery in the U.S. to ensure that we can get the nickel supply that we need in the form we need, so that we have the minerals that we need for the electric vehicle market. So, the fact that, Canada, Australia, and a few other countries, can provide some amount of nickel. I think it's a great story for us.
We've talked in the past about companies that hire consultants to write studies and reports and so forth. And this is the US White House report on nickel kind of feels a bit like that. Hey, could you write a report on whether we need a nickel refinery here? The answer is going to be, do you want one? So do you want one? Yeah, we do. Okay, that's what the report shall say. It shall provide jobs. It shall provide, metals security, minerals security, and someone's going to get rich off the back of it. Some American is going to get rich off the back of it. It kind of feels a little bit like, I think the answer was given before the report was written to me. Oh,
I'm sure. And across a bunch of critical minerals, and the fact that it came out while the G7 was going on, while they wanted to sort of give China a poke. Oh no, there's a political element to it. But again, the part, and it was reported on with Reuters. No, I mean, there are a number of U.S. government agencies that are actively carrying out this mandate. It's one of the few things that have bipartisan support. And so, it was under Trump, we were approached by, the U.S. consulate in Canada and asking us, what do we, a few months into our existence as a company, after we had just really got started, what support they could provide for us to help, advance our project, connect with U.S. consumers. And again, I was blown away by sort of how serious, they're taking the supply constraints for some of the key minerals that they need, of which, nickel and cobalt are two of them. So
okay, interesting. Yeah, I'd forgotten we'd had that conversation, hadn't we? But again, I think I guess what I'm a little bit surprised by, and we're seeing the effect in the uranium market yesterday and today. Biden's administration willing to have a poke in the side of the Chinese ribs, as it were, whilst this G7 is on down in Cornwall in the UK, to say, look, our team doesn't need your team over there, and these are my guys here. So the sorts of conversations which America wants to have with Europe is quite interesting. And the other G6. Well, actually, they've invited a few more. It's more than the G7. I think they've invited a few other stragglers along too. Say, our team doesn't want to play with your team until you stop being so aggressive with us, and authoritarian, ironically using that word. Because I think it's which is quite one is combative. It's kind of like picking up perhaps where Trump left off a little bit. It feels like, I know we haven't got trade wars yet, but it's that kind of language and rhetoric of saying to the European partners, "Thou shalt not buy or trade with China, please, if you want our custom, if you value our relationship." So it's getting just a little bit politicky out there, isn't it?
Yeah. Oh no, it is. And so again, the thing that I don't think investors really appreciate as much in the nickel space is that, again, 100%, more than 100% of the growth in supply over the last 10 years, and the more than probably close to more than 100% of the growth in supply over the next 5 years, comes from two parts of Indonesia, that are probably 94% dominated by Chinese companies. So, the fact that the automobile industries of all of these economies are suddenly going to say, "Oh, okay, yeah, we're comfortable with, putting all our eggs in one basket and getting all of our nickel from someone who's becoming, looks like the enemy." I just find a little mind-boggling. And to me, again, if you look across the mineral landscape, that sort of fundamental supply issue is something that people really don't understand, and is going to be the critical thing over the next 3 to 5 years. And again, talking, that is in my interest. Talking my book here from having a project, just outside the U.S. I think, and pretty close to Europe as well. So,
it could get really expensive. It could get really, really expensive. Okay, you can't have China goes, Indonesia, everything's coming to us, and we won't be selling anywhere else. There's a bifurcated market potential here. Not just that. Think rare earths too. That's for sure. And all of a sudden, cars coming out of China, going to look real cheap compared to their Western counterparts. For instance, just as an example. Tricky. No. There's a series of minerals where it's a real issue, and again, that's part of my reason around the class 1, class 2 discussion, which Tsingshan blew up as I expected, they or someone else would, in terms of moving nickel units around, just sucked up so much of the oxygen around the conversation around the metal, when it was not the real issue. It is this sort of, one China-centric world, and then the rest of the world. And, if you have minerals that only come from the China-centric world, then, over the next 5, 10, 15 years, unless there's a dramatic shift in the political leadership in China, is going to be a pretty problematic
relationship, and it's going to create some real opportunities for those companies that are one of the few sources in this part of the world, for those minerals that really only exist in the China-centric part of the world. So
that's going to be fun. That's going to be such fun going forward. Right. Okay. So let's talk about some of the other people in the market at the moment, and how they are faring. Let's talk about nickel supply. We said we would, so let's talk about nickel supply. So, what's the news out there from the various parties?
Yeah, so it's been just some snippets. We talked about Norilsk, who's the Western world, but the outside China and Indonesia's largest nickel supplier in the world. And they had the water inflows in their two mines. One mine is back to full production, and the second mine is back at about 40%. So still not quite there yet, but on the way to rebounding. And again, the two mines that were hit are two of the largest single nickel sulfide mines in the world globally. So the fact that they're shut down, does impact supply. The other news is, Vale looks like workers in Sudbury are going to go on a strike again.
What?
Given this huge increase in China, it's summertime. B, the nickel market's pretty strong. So if you're going to squeeze some money out of Vale, now's the time to really try and do it. On the company side, I think they will be out. If they're out and they stay out, they'll stay out through the summertime. That's in Canada, summers aren't that long. So if you've got a chance to enjoy the weather, you take it.
A union's a big thing there. A union's a big thing in Canada.
In Canada, still in a few places like Sudbury, is a historic, there's been some, epic, almost to the UK coal miner strike in the 80s with Thatcher. That's kind of was the history of labor relations,
right?
In Sudbury with Vale or formerly Inco, and then the mines up there. Now, 20, 50 years ago, Inco strike in Sudbury would have dramatic impacts on the market, but production there has been shrinking. So it's literally less than 2% of about 2% of global supply now. So it's not as much of an issue. However, from a company side, last year they sell a lot of nickel into very high end applications, and those really took it in the teeth. You had the aerospace sector get smacked, and you had the oil and gas sector get smacked last year. So, a lot of the tier one nickel suppliers were really sitting on some inventory at year end. They probably still, have been working through it as the year goes on. So, from a Vale perspective, if 2 or 3 months helps just squeeze the market for some of these specialty products a little higher, and premiums on the rest of their production pop up 50 cents or $1 a pound, not so bad. So I think neither one wants to stay out for 6 to 9 months, but 2 to 3 months is kind of helpful, on both sides of the fence. So
it's interesting.
They'll probably stay out for 2 or 3 months.
2 or 3 months. It's interesting because we've talked about, something like jurisdictional risk, elsewhere in the world, ESG issues, all of that, all that kind of good stuff. But you kind of forget to think, hey, some of these Western-based projects are also going to suffer from some of those normal, I guess, regular issues that, of yesteryear. I didn't realize that would still be a thing today. I thought all the unions had kind of been removed and got rid of, because they kind of have here in the UK. They just they don't have the power they did.
Yeah, no, there's not. It's pretty similar across a lot of industries in Canada, but there's still some sort of generally places that have been operating for 80, 90, 100 years are still, relatively unionized and still a little bit of company confrontation. In the copper market, in Chile, that's a massive issue. That's had some real disruption, to the copper market. And again, I think some of the political changes in Chile and Peru, is going to be an ever increasing, you'll see an even bigger swing that way, I think. Which is a to me, it's more the shift in the geopolitics there around those two countries that's going to be the biggest risk.
You say we actually interviewed the Chilean ambassador here in the UK.
Yeah.
We interviewed a left-leaning politician in Chile. a journalist and a lawyer and the president of the Mining Association in Chile too, just to try and understand what is going on. I mean, I think their view is that this is all just political posturing, because they've kind of got their kind of regional elections, I think end of this month actually.
Okay.
And then the kind of the country goes to the polls in November this year to elect the new president. And it's a lot of posturing. But what's happened there is quite interesting. They basically, because everyone's just so irritated with the previous administration, loads of independents have actually got in, right?
Yeah.
Because they've got this kind of they've got this far left. They've even got a kind of communist party there. There's a phrase I hadn't thought about until I had a conversation with them. Communist party, really? You know, and but you know they've won about a third. They had about 30% of the seats, so they weren't kind of going anywhere. But all of a sudden, these independents have kind of stepped in for these right-wing politicians, and you know, on all sorts of things. Oh, water, birds, you know, employment, schools, whatever, all on very local issues. But any future government's ability to get a general consensus, which requires 2/3 of the Senate, 2/3 is zero, because it's like right wing 30%, all of these independents 30%, left wing and communists 30%. It's like it's very hard to kind of garner the support to actually make constitutional change, and they are going through constitutional change, and the number of topics covered in that is just vast, and getting agreement on it is going to be, oh boy. That's going to be interesting. But so the tax increases for copper miners, probably more in line with what's happening in Australia. You know, what they're charging in Australia, not the 80% sort of number which we see in places.
Yeah. Oh no, it's not going to be any. Yeah, you know, I agree. It won't be. There is some extreme talk, but I don't think it'll be. It won't completely kill the golden goose, but you know, it will. You know, Chile from a mining investment perspective was very, very attractive. But the reality is, and again, they have real constraints on water. They have real constraints on labor availability. They have real constraints on infrastructure in a lot of these places that copper is found. So again, you know, that's why again, I'm bullish on our project, is that, you know, we've got all of, you know, we're in location where we've got all of that in place, you know, and you don't face the same constraints that you do in a number of other locations around the world. And again, the big mining company majors, you know, are going to be looking for places where, you know, okay, we have a lot of that kind of risk over here. It would be nice to be in a location where we have zero water risk, because you know, there's no issues on that front.
Interesting. Voisey's Bay?
Voisey's Bay Underground. So this is the open pit, which was a cash cow for about 15 years, is now depleted. They're spending $1.5 billion for 40,000 tons of production for 10 to 12 years. They hope to find more when they get down there, but that's the plan. So they got first ore out of the ground again, just to sort of underscore why haven't the sulfide mine sort of stepped up? Well, that project started about 3 years ago, and they're just getting first ore now, and they'll be fully ramped up in about 2 years. So, most of the nickel sulfide resource from the existing old producers is all relatively deep and takes a while. Glencore's project in Sudbury is going through the same kind of development path, sort of 5 years from collaring the shaft until you actually ramp up and hit full production. So no, it's good. The unfortunate part, and again, the sign of a frothy market is the lots of new quote nickel projects. And again, I'm not going to talk to any of them. I don't want to poop on any one specific, but just in general, there's kind of two buckets. When we've talked a little bit about this in the past, there's the closeology play, right? It is adjacent to or on trend from this great discovery or this great mine that's there. In Australia, there's some pretty well developed nickel provinces, so it's a way to do it. And again, there are times where it is good and it does lead to a decent discovery. But again, just the things to look at. So, is it a brand new district? So someone's made a new discovery, and these guys just happen to have some property next to something where someone's made a brand new good discovery that people hadn't thought of before, then okay, that check. B, is that new company a financial promoter, or are they a seasoned exploration person or a seasoned industry person who knows that commodity and does really understand the geology and how to unlock the geology to be able to find something? Then that's good. On the flip side, if it's something that's been around for a while and all of a sudden, we're next to 40-year-old mine A, and surprise, surprise, we're right next door, but it's been here for 40 years, but we're going to find some nickel, find nickel or whatever metal this time. The only time that's generally a good thing, because again, if it's any good, somebody would have taken a poke at it, and probably did, through 3 or 4 cycles. The only time, and this does happen sometimes, is, some crazy prospector might have had a parcel of land and it sat in a family for 50 years and no one could pry it out of their hands. And finally that person dies and then this parcel comes to market, or there's some other issue that kind of tied it up for a long time. It was in a crazy joint venture. Something along those types of lines, and in that case, okay, then they maybe have a shot at getting something. Again, closeology is just because there's enough to talk about. It's a great way for promoters to have a nice lifestyle company through 2 to 3 years of a boom, because there's enough smoke there that you can go out and raise your $5-ish million and do some drilling. Do some exploration very slowly to make sure that you extract as many years of lifestyle out of it as possible. The other bucket is the recycle. Again, there's lots of properties that every boom they come along and okay, this time's different, but it was drilled in, again, talking from a nickel perspective, and might have been drilled in 2010, 2011. It was drilled again in 2005, 6, and was drilled again in the 80s. If there's a new exploration technique that hasn't, been applied to it, then perhaps. But again, if it's been drilled in the last 10-ish, 15 years, most of what's been tried has generally been around. But again, the things to look for, because in some cases it is, there is some real things and discoveries do happen on these properties. But it usually, again, comes down to a couple things. One, it's been a while since this property was discovered. So yes, there's been a huge advances in exploration technology over the last 25 years. So, if it was last explored in the 80s and 90s and is now really only getting poked at since that time, then okay, yes, that's it. And then B, again, look at who's running the company. Is it a promoter, or is it again, seasoned exploration person who's actually made some discoveries and is coming into it and says, yeah, okay, we've got some new views on this and that hasn't been looked at before, and makes a good case as to why that is. So just keep your eyes open, because the gates are, the floodgates are open now, and if nickel prices, again, I think will be largely sideways, but by the end of the year, as the 100% plus growth in nickel consumption and EV that we're seeing in China, continues through, we will start to move up another level in nickel, which is just going to, open up the floodgates even further, and you're going to see a lot of crap come to market. So just keep the recycle and closeology sort of things, in mind as you're looking at stuff.
Got it. I'm going to look out for crap.
Yep.
It is true. It is a kind of funny, it's a funny season, isn't it? It's a funny moment when you see this stuff, and I come to those sorts of investments really, really skeptical. I'm literally thinking, you better give me a good reason why you're not going to lose my money. Not even make me money, why you're not going to lose my money. And invariably, They don't have answers. And I've had a few in the last 2 weeks. You're just listening to this thing, you're going, I will keep going for the sake of the listeners, but I've written this thing off already, because it's so obvious. Because there are exceptions, and I guess that's what keeps people going, but 9 out of 10 you can spot them a mile off. Should we finish off with some of the so the nickel juniors here, which are Talon actually, and I spoke to the Talon CEO last week. He may be joining us on the show if he's allowed to by his paymasters or at Rio, but so hopefully he will come on. Nice guy.
Yeah, no, it's been great. They've had a good series of discoveries, and again, my thing is when you start to see discoveries, just are they giving you good indications of what the size of the target is that they're drilling? Are they drilling it in tiny little step outs, or are they starting to get into 25, 50 meter step outs? And this new discovery area, which is shallower than the resource they had, they're getting some pretty consistent, solid results to it. So, again, it's good to see some good nickel discoveries. Again, if you want to see some good graphics in terms of what a good step out program looks like, Poseidon Nickel, there's a new discovery adjacent to some mine workings. And again, just bump, 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 bump. Again, it's not sexy, crazy, not weird, any weird angles. It's basically, hitting the target, at a certain spacing, and delivering some pretty consistent results as they do that, and so that, that deposit will probably, come into production sometime next year. Another one that's done a decent job in terms of stepping out with multiple targets on the property is Azure Minerals up in northwest part of Western Australia. So getting some good results there. So, again, we need more nickel discovery. So it's good to see these guys, really delivering in terms of, unlocking the exploration potential of their properties.
Brilliant. I'm going to nearly wrap it up. Mm-hmm. So you've talked about obviously net zero carbon.
Yeah.
Low carbon potential. And we maybe want to talk about low carbon potential for ultramafics at some point too, in a bit of detail.
Yeah, no, it was good to see. So again, news flow on the, in this market, being able to have the potential to produce nickel in a low carbon or zero carbon way. Again, we were in the, in the first percentile of the carbon curve for nickel, which we're very happy. But our number didn't include the potential carbon offset of the fact that these ultramafic nickel deposits, the rock that hosts them has, when it's exposed to air, it spontaneously absorbs CO2, which is a great property to have these days. And so again, First Point Minerals and Giga, both are ultramafic nickel deposits and have the same potential that we do with Canada Nickel and that we had with our Dumont property. And so they both announced results from some of the test work they're doing. And again, they're showing pretty decent carbon pickup, from their tailings. You want to see how these things behave over a longer period of time, and so it's something that people are going to do. We're in the process of getting those tests done ourselves right now, so you'll see some news flow on that over the coming year. But again, the fact that it's being seemingly pretty consistently delivered by multiple deposits should give investors comfort that this is really it. It is a real. It is a real property. And again, I can tell you the U.S. government is pretty keen to find ways to produce materials with a lower carbon and footprint. And their Department of Energy is working with, looking at, trying to facilitate research and development in that area as well, too. So, again, I think it's good for, this, what I call the next generation of nickel that, is going to be sizable sources of nickel supply without either massive amounts of SO2 that you get from sulfides or massive amounts of CO2 that you get from the nickel pig iron producers. So
fantastic. So more of that.
So I'm quite happy to see it.
More of that to come down the line, as and when, because I think people will be interested in it for sure. Mark, good to see you. Welcome back.
Thank you, sir. No, it's good to get back in a regular routine here. And again, I think as we get towards the end of the year, the nickel market's going to start to get quite interesting. So
brilliant. Okay, we will see you next week.
Thank you, sir.